U.S. economy now at maximum recession stress. The United States economy contracted at a staggering 6.2% pace at the end of 2008, the worst showing in at least a quarter century, as consumers and businesses cut back spending, plunging the country deeper into recession. The Commerce Department report released Friday showed the economy sinking much faster than the 3.8% annualized drop for the October-December quarter, first estimated last month. It also was much weaker than the 5.4% annualized decline the economists had expected, and a much sharper cutback in consumer spending, which accounts for approximately 70% of economic activity, along with a bigger drop in U.S. export sales and more reductions in business spending and inventories, have all contributed to the largest revision on records dating to 1976. So looking ahead, economists predict consumers and businesses will just keep cutting back spending. Right now, we're in the period of maximum recession stress, where the big cuts are being made, said economist Ken Mayland, president of Clearview Economics. And on Wall Street, stocks were down slightly. The Dow-Jones Industrials lost approximately 25 points in afternoon trading, and very possibly there's more of the downward spiral to go. The new report offered grim proof that the economy's economic tailspin accelerated in the fourth quarter under a slew of negative forces feeding on each other. The economy started off 2008 on a very feeble footing, picked up a little bit of speed in the spring, and then contracted at an annualized rate of 0.5% in the third quarter. The faster downhill slide in the final quarter of last year came as the financial crisis, the worst since the 1930s. Yes, again, the worst since the 1930s, intensified and is still intensifying. And this is a worldwide economic crisis all around the world. As goes the United States economy, so goes the rest of the world's economies, because they are all connected now. It is a worldwide economy. And consumers at the end of the year cut spending by the most in 28 years. They cut spending on automobiles, furniture, clothing, appliances, and many other things. Businesses cut spending also, dropping the axe on equipment and software, home building and commercial construction. Before Friday's report was released, many economists were projecting an annualized drop of 5% in the current January-March quarter. However, now, given the fourth quarter showing and the dismal state of the jobs market, believes a decline of closer to 6% in the current quarter is possible. Something on that order. The nation's unemployment rate is now at least at 7.6% and possibly higher. This is the highest in more than 16 years. The Federal Reserve expects the jobless rate to rise to close to 9% or more this year, and probably remain above normal levels. A smaller decline in the economy is expected for the second quarter of this year, although it's hard to predict exactly or with any kind of confidence, because these are times like never seen before. But the new GDP figure, like the old one, marked the weakest quarterly showing since an annualized drop of 6.4% in the first quarter of 1982, when the country was suffering through an intense recession. It's going to be a challenging 2009. Scott Davis, Chief Executive Officer of global shipping giant UPS. So then, American consumers, worried and spooked by vanishing jobs, plunging home values, and shrinking investment portfolios, have cut back, and in turn, companies are slashing production and cutting payrolls. Rising foreclosures are aggravating the already stricken housing market. Hard to get credit has stymied business investment and is crimping the ability of some consumers to make big ticket purchases, which in turn, well, it's the spiraling outward or downward effect. Rippling outwards. Yes, it's creating a self-perpetuating vicious cycle that Washington policymakers are finding very hard to break. And, once again, there's something bigger than all this going on. There's something more going on here. Theoretically, to jolt life back into the economy, President Barack Obama recently signed a $787 billion recovery package of increased government spending and tax cuts. The President also unveiled a $75 billion plan to stem home foreclosures, and the Treasury Secretary said as much as $2 trillion could be plowed into the financial system. Perhaps money won't solve all this. Like I say, there's something bigger going on here. All systems must change rapidly. That can change. And for all of 2008, the economy grew by just 1.1%, weaker than the government initially estimated. That was down from a 2% gain in 2007 and marked the slowest growth since the last recession in 2001. With Friday's figures, Mayland lowered his forecast for this year to show a deeper contraction of just over 2%. Of course, like I say, it's hard to predict. In the fourth quarter, consumers cut spending at a 4.3% pace. That was deeper than the initial 3.5% annualized drop and marked the biggest decline since the second quarter of 1980. Businesses cut spending on equipment and software at an annualized pace of 28.8% in the final quarter of last year. That also was deeper than first reported and was the worst showing since the first quarter of 1958. And, continuing, fallout from the housing collapse has spread to other areas. Builders cut spending on commercial construction projects by 21.1%, the most since the first quarter of 1975. And home builders cut spending at a 22.2% 8% pace, the most since the start of 2008, and a sharper drop in U.S. exports also factored into the weaker fourth quarter performance. Economic troubles overseas are cutting demand for domestic goods and services. Yes, once again, all these are connected. All these signs are connected to the end times transition days. Just look around. There are many, many signs.